Hey guys, let me introduce you to my buddy, Planless Pete. Before we get started, I'm going to tell you about Planless, not painless, because he suffers a lot of pain. But Pete is a impulsive and compulsive trader who doesn't have a plan. He jumps into trades on a whim. I don't know if you can relate with that or not. And often driven by fear of missing out. He holds on to positions even when they're losing. He just watches it continue to go down, down, down. He thinks he's buying the dip, but he's buying the dip, what turns out to be just a falling knife. You know, he wants to buy low and sell high, just like all of us do. But the problem with poor Pete is he never does, because Pete doesn't have a plan. But Pete really has a problem. And it is basically Pete's decisions are driven by emotions, not strategy, which leads him to unnecessary losses and a whole lot of stress. But fortunately, there is a fix. And it's crucial for Pete to recognize that he needs to develop a solid trading plan based on a simple, clear, and proven system with an edge, rather than his short-term impulses, and implementing these strict rules for when to enter, when to exit, setting stop losses, regular reviewing trade performance can transform his chaos into clarity. And so, with a little bit of discipline, this is what can happen to Pete. Pete can become happy Pete, because now he's the Pete with a plan, the Pete with a plan. And that's him right there. So let's blow him up a little bit. And look at that smile. He's a happy guy. So, hey, welcome everybody. This is Dennis Wilborn, the AutoPilot Trader. I want to thank you for joining us for today's session. And if you're coming in from wherever you are, just say, hey, aloha. I'm in from Graham's in from New Mexico. Jake's in from Aloha. No, Jake's in from somewhere. I don't know where it's at. If you're over there on the Instagram, welcome aboard over there. Please let us know where you're dialing in from. And so basically today, guys, we're going to talk about a couple of different things. One, I think we need to focus on a quote by a very famous man, J. Wells Wilder. Now, who was J. Wells Wilder? It's something you may want to ask. Well, J. Wells Wilder created the RSI. He's a really brilliant guy. And Mr. Wilder, just call him Mr. Wilder. He basically said that letting your emotions override, I'll read it to you right here, override your plan or your system is the biggest cause for failure in trading. Now, I don't know about you, and I shared the little story about, Planless Pete. And in reality, that was my story, because, back when I first got started trading, I was basically this, wild and crazy Navy jet pilot shooting from the hip, thinking everything was cool. We don't need no stinking rules, man. We'll make it up as we go along. And guess how that worked out? Well, how that worked out is me blowing up 2 accounts, which was really, really ugly. And so today I'm going to be sharing with you 6 golden keys to creating a trading plan with a winning edge. And it'll give you a starting point. If you don't have a trading plan with a winning edge, so I encourage you, take some notes on it, and basically just 6 points. And if you just follow those 6 points, these 6 points are 6 keys, are basically, whether you're a trader or an investor, it basically fits in both categories. And so but first, before we get into that, let's take a look at some stocks that are in the news. I'll go ahead and stop sharing that screen. I'll go back over here and grab the news panel. A couple of things I'm looking at that are very, very interesting. One of them is, we'll come back to this, but I think this is a very interesting aspect, is the Tesla bulls, and there's a lot of Tesla bulls out there, are turning bearish because the EV maker could lose money this year. That's a very interesting perspective in that, because Tesla has been making money, it's been doing really well, but there's been a lot of chaos, a lot of noise. Now, does that mean Tesla's a bad company? No, it doesn't. It doesn't mean that Tesla's a bad company or a terrible company. Doesn't mean that whatsoever. At the same time, though, we have to remember to keep looking, really, here's a good pun for you if you like good puns. We have to remember to keep looking under the hood just to make sure that it's still running smoothly. And so it's got a lot of headwind that's facing, that's basically putting off. We'll be taking a look at a chart on Tesla a little bit later today on where's a good place to buy. Do you buy right now? I mean, it's in a downtrend. And then I'll ask another important question. Do you believe in, and you can answer this in the chat box, if you will. Do you believe in averaging down when you're buying your stock? Or do you believe in averaging up? They are both acceptable approaches if, and I'll put a big if, this is a capitalized if you have a plan that assures you know when to enter and when to exit so that you limit the risk to the upside. So that's one there. Let's go ahead and stop that. Pop back over to share my screen again. And then we're going to start rolling down some. There we go. Allow. There we go. Okay, let's start rolling down some of the things that are going on. Magnificent 7 stocks to buy and watch. NVIDIA hits new record high. Tesla slides. And so the Mag 7 stock, we're getting a mixed bag on the mix on the Magnificent 7, in that I'm going to be taking a look at CrowdStrike, Tesla, Google, Apple, and ARM today. And 3 of the members of the Magnificent 7, Tesla, Google, and Apple. And we could also throw in Amazon on that. We may take a look at Amazon. They're showing signs of weakness right now. And, are they going to crash? I don't know. Are they going to pull back? Are they going to go out of business? And, basically, yeah, Apple's not going to. But how do you want to position yourself if you want to be a long-time holder in Apple? And I have some suggestions for today. What else is going on here? Gold hits new high, record high. And oftentimes with gold, it is the seasonality of gold to be rallying to the upside, which is awesome. Let's see what else is going on. NVIDIA up, PLT, Palantir is moving higher. Let's see what else we got going on here. CrowdStrike, of course, after earnings, CrowdStrike is doing a very surprising move today, and it may not be a good move to the upside. So, and I'll explain that once we get over to the charts on CrowdStrike. What else is going on here? Stocks celebrate Powell's comment on and CrowdStrike catapults as Foot Locker stumbles. What's really funny is back when I was flying, everybody was when they used to use the steam catapults. This catapults you off the ship so that you could go fly off the carrier. They used to have steam catapults, and the steam catapults were a little bit less reliable than the later on hydraulic catapults that they started using that were much more reliable. And so occasionally, as it says, it basically catapults off. I'm wondering, because we aviators were always afraid that we were going to get what was called a cold shot. In other words, the steam catapult didn't get fully charged and would shoot you off the end of the carrier without enough airspeed to actually fly. And so the person would wind up crashing or ejecting, and then the airplane would crash. And so I'm wondering, and we'll take a look at that chart on CrowdStrike. Is it getting a cold shot? Yeah, we'll see. Amazon stock, a buy as the tech giant chases returns to a record highs. We'll take a look at that one also. And finally, let's see, stocks to watch. What's going on in crypto? If you're a crypto person, just leave a Y down in the comment section. Yes, you trade crypto. If not, that's okay also. I'm watching one of the crypto stocks that I am watching is Mara, simply because its fundamentals aren't that great, but oh my goodness, it's got really great technical patterns that you may want to take a look at. So take a look at Mara, M-A-R-A. Okay. And then Fed Chair Powell says it's too soon for a rate cut. And S&P rises. However, is it going to continue that through the rest of the day? I don't know. I really don't know. And so let's go over to stop that. And I'm going to basically just chat with you just really quickly about the first two keys of putting together a trading plan that has an edge. And one of the things that is very important is, number one, define what you're going to trade and how much of it. Now, when I say by that is make sure you have criteria for selecting either slots. We're not in Vegas, Dennis. No, stocks and or ETFs, if you trade ETFs. One, how many positions would you like to have open? Now, some people think that swing traders should have somewhere between 5 and 7 to 8 positions open. That's a good, reasonable number. At the same time, though, if you have additional bandwidth and want to bump it up higher than that, it's fine and great. But as there's a point of diminishing returns when especially if you're full across the board, let's say 10 or 15 stocks, the management becomes such a pain in the rear unless you're using some kind of conditional order or something like that where you can fire and forget it. Then it's not, it can take away from the other things you may want to be doing. Okay. So that's number one. Decide what you're going to be trading, identify the stocks, the specific. And let me tell you what I've identified for myself. I trade high quality growth stocks that are identified and meet IBD fundamental criteria. And I trade a small corral of thoroughbred ETFs and their leveraged ETF counterparts. That's what I do on number one. Number two is identify when, how, where to enter the trade. What has to happen? And that includes the price, that includes the pattern, and you write that all down in your rules. So there's number one and there's number two. Let's go ahead and see what else is going on there. Let's take who wants to look at some charts? I want to look at some charts. Here we go. Let's take a look. Which chart is going to pop up first? Oh, that's a good one. Okay. I know you can't see it behind me. I'm going to basically take my photo off of there for the time being so everybody can see the whole thing on this. This is an exceptionally interesting chart of CrowdStrike. CrowdStrike after hours, reported earnings after, I think it was after hours. Let me double check that. It was, yeah, after market closed last night. And you saw all the big after hours moves. It was popping up real high, going crazy and all that type of thing. The gap from the close yesterday, which is down here where my arrow is, up to the opening was over 21%. Strong move, right? Positive move since it broke out from a past level of resistance, okay, a past high. So all's really good, right? And then you anticipate, once you get a breakout, you do anticipate some kind of a pullback towards the breakout area. For CrowdStrike, though, what happened is we are basically in the process of selling off back below the breakout zone of 338.45. Let me get a number here. And from the high today to where, maybe we'll get a line on this. Here we go. From the high today to where it currently is, it is pulled back over 10%. Over 10%. So from a technical standpoint, and I have to get there we go. From a technical standpoint, that is not a show of strength on CrowdStrike. Now, might CrowdStrike come back around a little bit later? Yeah, sure, it might. Is it a time to sell it right now? It depends on where you got in. Now, we started buying CrowdStrike, and I'll show you where the AutoPilot trading members got in. We got in right here at about 474. It ran up. We had an excellent move to the upside on that. Go ahead. So we rode part of our position all the way up to about here for about a 74 to 80%, ride. And we took off profits at 10%, 20% as we normally do. But it was a heck of a good ride. That was really nice. That was October of last year. But then as we went into earnings, NVIDIA, when they did their earnings, CrowdStrike reacted in sympathy with not NVIDIA, but Palo Alto Networks, fell down to the 50-day moving average and did a really nice rebound. But the rebound was short-lived as it started to sell off again. So if you're trading CrowdStrike, is anybody in CrowdStrike right now? What's your plan to exit CrowdStrike? Where are you going to draw in? Where are you going to draw in your stop losses and that kind of stuff? If you're profitable, like if you have 75, 80% profits from where you got into CrowdStrike, determine and write it into your rules. How much do you want to give back? Very important piece of information to know. How much profit are you going to give back? A round number that a lot of people will use, that a lot of pros use and all this kind of stuff, they'll usually use a percentage point of, about 25%. Once it's gone up over 50%, they don't want to give back more than 25%. Another means of identifying where to exit is go here to the swing lows and use those as a level of where to exit. Like the closest swing low, which would be right there at 290. But you got to make up your mind, do I want to let it drop from where it's at right now to 290 right there? Because that's another 12%. Another thing is people will use the 20 or 21-day moving average or the 50-day moving average. And we'll use either an ATR or sometimes they'll just use, hey, if I drop this and it closes below it, I want to get out. And so those are some of the things that need to be planned. So that's what we've got going on with CrowdStrike. Let's see. What about our buddy? Yeah, we'll hold Tesla till the end. Let's take a look at Amazon. Amazon of a magnificent seven deal. Okay, really interesting. And let's dig into this just a little bit because I find this really intriguing. On Monday of this week, we had a shooting star bearish Arami, and that shooting star right there turned out to also be kind of a tombstone doji that was fulfilled the next day with this big down day that cut through and closed below the 8-day moving average. That can be one of the things you look at when it closes below the 8-day as a clue that we may be going to get a jackhammer effect to start hammering down the moving average, especially since we've already had a nice big run up here. And so today, what are we getting? We're getting basically it tested in the middle of the big red candle and then is rolling over from there. If we take out the low today, which is 173.30 from yesterday, and we've already taken out the low from yesterday, so we now have a new low in place here. We take out this low, which is at 127.27. Then we've got a lower low in place, which is the first part of a first part of a downtrend. That's the first initial element. Because what do you need for a downtrend? You need lower highs and lower lows. And so, okay, Jake, so you are in CrowdStrike. Yeah, I was taken out when we had set the stops. Let's see what else we got. Any comments? And yeah, please feel free to jump in, leave a comment. Let me know what you're thinking. And so, Graham, you guys, you're on your way back up into Colorado. Did you enjoy the warm weather down in the desert? The desert. So Amazon, that's what I'm looking at. Where this comes, if you ever want to play this to the downside, and here's just a suggestion, not a recommendation, it's just something that I like to do, is you could set in with the anticipation, since this is a bearish reversal signal, I look, where's it likely to fall? Well, it's likely to fall at least to the 20, which is at the $171 level, or it could fill this gap right here, about 170. So when it bounces up to the 8-day moving average, which is about 175, or was earlier today, you could think about putting in a bearish bear put spread at 175 by 180. In other words, you buy the 175 put and sell the 175, and you buy the 170 put. And earlier today, it was running for about $1.57. And it's already up to about 250 or something on that particular spread. And so that's a good way to, if you want to trade to the downside, you can do that, but do it in such a way where you're not risking the farm on it. You'll pick up, you'll pick up some good spending money, $400 or $500, and then be out of it. And what I like to do with my spreads is I start taking profits when the spread has reached a 25% profit target. And then I take the rest of it off the table at 60 to 65% profit target. And the reason I do that is because if you wait to basically squeeze the last couple of nickels out of the spread, there's a tendency for it to reverse and go against you. And then you wind up saying really, bad words or hitting your head against the wall or something. So that's what we got going with Amazon. What's next? Oh, Google. And so as I'm looking at these charts, one of the things I'm doing, folks, is I'm wanting to share this information with as many people as I possibly can. That's an interesting comment. Sausages of Valencia. All right. One of the things that I look at and what I'm trying to do is share in this live stream is just the way I look at particular stocks or cover the stocks in the news, anything that you want me to take a look at a little bit later. If you want me to look at a particular stock. Okay. I like your handle though, man. Sausage of Valencia. That's all right. So So anyway, so here's what we got going with Google. Let's throw on this. Okay, I've highlighted the 200-day moving average. We fell from the sky like a 200-day moving average. Now, one of the things I said a little bit earlier about, remember when we first got started, I was talking about planless. We were talking about planless Pete. And what planless Pete, because Google is a big company, planless Pete would basically be looking at opportunities like this, okay? Because he wants to buy what he thinks is buying the dip. But in reality, when a stock turns around like this, you want to be selling the rip and not buying the dip, if that makes sense. What I mean by that is, I wish I had my drawing pens that would work here, but I don't. And so I will. What I'll show you right here. There we go. So price action fell down to the trend line and then rebounded. As soon as it puts in this lower low on this rally attempt to get back up here in the middle of this gap, that's basically telling us, Google's in trouble. Google's in trouble, but how far is it going to go? It came down to the uptrend line, stopped, rebounded, right? But look what's happening during that time frame. The moving averages are starting to roll over. The jackhammer effect is working. Rolls right back up to the moving averages, can't hold above the moving average. That's the 8 and the 20, reverses and falls. Now, planless Pete saying, oh, Google's a really good stock. I want to own it. He's buying right here. And the problem with that is he's in a downtrend. The thing that Pete needs to learn, though, if I could use that. Oh, it's coming soon. The thing that Pete needs to learn is he needs to look for a opportunity that looks like this. Let me see if I can. He needs to look for, the prices move down like this. They'll move back up like that, but then they will basically get back in the moving averages and probably roll over again and retest. And when it retests this level down here, and then retest and does what? And starts to rebound. That is a dynamite trigger, especially if it's bouncing off up against the above the 200-day moving average. And Tobaho, I do use fundamentals. But I basically follow the fundamentals that follow the fundamentals that are provided by Investor Business Daily. In other words, they do my fundamental analysis for me. And if it passes their requirements, it passes their fundamentals to be considered a strong fundamental stock, then it simplifies my job, because all I have to do then is simply read the technicals. And so I'm covering right now some of the Magnificent Seven stocks, or Magnificent Seven stocks, or Magnificent, whatever it is, Magnificent Seven, Magnificent Eight, and where they're at. And like I'm saying, like with Google, from a technical standpoint, this has looked like it wants to go further down. Huge warning signs here that started back here, and now we're going to close back below the 200-day moving average. And I'll go over here and blow this up a little bit. This is I just switched to the weekly chart here. Let me get rid of those, remove those drawings, trend line 1. There we go. And so as you see, what's happening here is actually on a weekly chart, this is even looking worse than what I thought it was, in that if we finish the week, and again, there's 3 days, 2 more days until the end of the week, and we close below the 40-week moving average, which equates approximately to the 200-day moving average, that's a sign that there could be further selling going on. How far? Well, that's when I start triggering and targeting past lows. There's a past low there, about 127. There's a past low down here about 120. And if those break on the way down, I want to be looking at those. The other thing I take a look at on my stocks is I'll just throw a Fibonacci up here from my last big run on a weekly basis. And what's where and I'm going to go back to the daily. And what you'll see here is I'm breaking out of the bottom of the magic fib box. It runs from the 38% retracement to the 61.8% retracement. That increases the probability I'm going to probably fall further. And on a stock that is trending up, typically you'll get a pullback only 1/3 to 2/3, which kind of correlates with the Fibonacci's. And so Google's given us some, I think Google's given us some really interesting warning signs, and we'll see what transpires. I'm certainly not going to, I wouldn't be selling it here, but I'm not going to be buying it here either. Where I would want to be looking to do is I will not trade against the trend because we are in a downtrend. However, I will watch this to see if we get a rebound back up to, I'm going to say, this 50% mark here, 137 or so. I put an alert there. If I get up there, then I can make my trading decision on what to do with Google. And so let's go on to, how are we doing here? Oh, we're doing great. So let's take a look at Apple. Now, Apple is also another one of those stocks you want to go, you can say, I want to own Apple long term. And I'm going to give you a clue right now about, how do you know it's the time to buy? Because people could be, nibbling on this all the way down and down and down. And I wish I had it where I could put it up. Maybe I can. Just hold on a second. Let me see if I can grab a. I was doing an early analysis on. Did you guys remember the stock or the company called Enron? Who remembers the company name Enron? It was a very, just throw a Y down in the comment section. Do you remember Enron? Enron back at the beginning of the 2000s was a hot energy company that, there we go. I'm going to see if I can pop this up for you guys. It was a hot energy company. Okay, cool. That was, let me see if I can I bring that over here? No, I can't, but I can grab it. So this is the benefit of live stuff, right? No. Let me grab this chart because this chart is just absolutely incredible. But it's a chart you need to be aware of, I think. There we go. And so let's go ahead and roll this over here. You won't be able to see it yet, but I'm going to go ahead and stop this. We'll get back to Apple in just a second, but I want to show you this particular stock because Enron, the story about Enron was very, very interesting in that snippy tool. There we go. There we go. I'm going to blow this up a little bit and then see if I can also blow this up a little bit. Zoom. So here's a picture of Enron. So I'm going to zoom it up one more time, guys. There we go. And what you see here is Enron back during this time period, 1996 to 2001. What was told was Enron is the darling of Wall Street. Okay, we've seen a lot of stocks like that. And the share prices continue to rise. Fortune magazine came out and calls Enron America's most innovative company for the last 6 years. That was between 1996 and 2001. Then in 1990, and that corresponds to this point right here, A. Then in 1999 to mid 2001, which is B right here, Enron executive and directors received $1.1 billion by selling 17 million shares of Enron. And then you may recognize this is a complex head and shoulders here on Enron, but it started to fall. And there were people who were buying the dips right here. Unfortunately, the Enron employees could only invest their IRA in, from what I understand, as I remember the story, could only invest their IRAs, their 401ks in Enron stocks, right? At this point over here, D, the president of the company, or the CEO of the company, Ken Lay, basically came out and said, Enron is doing well, and we were going to bounce right here, and you need to buy more shares, which the employees dutifully did buy more shares. And once that took place, I'm going to get so you can see how disgusted I am. It continued to fall until it claimed bankruptcy and eventually went to zero. And there's a lot of, there was a lot of legal ramifications. Ken Lay was basically taken and was convicted. He was going to go to jail, but he passed away before he went to jail. And so when we look at a chart such as, Apple here, could Apple fall to zero? I doubt it. At the same time, though, anything is possible. Anything is possible. If you were trading the markets back in 2007, 2008, where we had the housing debacle and the savings loan debacle, that, hey, some companies, they used to say they were too big to fail. Well, that stopped being the issue. So on Apple, so what are we going to do on Apple? Let's take a look. Whenever you have a situation like that, always revert back to the longer term chart. And here's a weekly chart on Apple. And what's it doing? Apple is looking like it's going to reach down here about $64, $65. So that's where I want to put in my alert. $64, $65. And if that breaks, then watch out, because we're probably going to fall a lot further. Then I also take a look at the monthlies. What are the monthlies telling me about Apple? Now, this monthly goes all the way back to where? It goes back to 2020. Yeah, 2020. Now, we know Apple's been around a lot longer than that, and I can slide this to the right and left, and you can see where it's gone. But on the monthly chart, this level here looks very interesting. That's the 124, a level. And so could we fall to 124? I don't know. But I will go ahead and mark that on my chart. But what I'll do is I'll mark the body portion of it about 130.28. So kind of cool there. So that's what we got going with Apple. Now, how do I trade Apple? Right now, if I wanted to do anything with Apple, I would wait for it to pull back up into the moving averages, and then I'd do some kind of a bearish downside trade with an option. That's what I would do with Apple. So ARM. Now we're getting to everybody's favorite stock, which is Tesla. We'll be there shortly. ARM's looking pretty good. Came up here. I'm going to remove that, make it a little bit more clear. It is just driving sideways. You got to remember that ARM is a newer IPO, and this 115 area is a place where I'd be interested in buying somewhere between 120 and 115 is a place that I would look at potential buying, because right now it is just driving sideways on lower volume. So not selling off, but again, not moving any higher. So we will take a look at that. ARM is on our watch list for our premium members. And I mentioned MARA, which is Marathon. Marathon also really nice moves down into levels of support. And the thing that I like about Marathon, and I'll just throw this on here really quick, is it moves a lot, and it moves a lot very quickly. There was 133% in 39 days or 28 trading days. So absolutely amazing there. And so what am I waiting on right now? I'm waiting for my momentum, as you see over here, falling down. I'm waiting for my momentum to shift back to the upside. It may have to get all the way down here, but as long as my momentum is facing down, both on the daily and the weekly chart, everything's looking down, I don't touch it. Right now, we're looking at getting a bearish, roll it up on a weekly chart, a bearish engulfing over several weeks worth of movement. Not, and it doesn't mean that Marathon's a bad, terrible, company. It just means that I need to wait, because I need to wait for the setup, especially if I'm going to try to trade it to the upside. Last but not least, let's take a look at Tesla. Tesla is looking really interesting. As you see, it came down and breached this low at 175.01. Come down a little further, and you will notice that Tesla is operating within a downtrending channel. And since we only were able to rally up into the halfway point of the channel, this break of structure right here of the of this flag is just basically, it's a bear flag. And that break of structure from the midsection is definitely a negative on Tesla, at least for the short term. Now that may go on for the whole year. Remember the article we saw earlier that said the Tesla bears are going, hey guys, we may not be profitable going into this year. So what am I looking on Tesla? We could get down to we can get down to about 167, 169, somewhere around there. That's the downtrending channel. Downtrending channel breaks. What's next? 152. If that doesn't hold, then we could get a bounce from there. Again, I'm back into a position where I'm looking on a rebound trade, not to buy on the rebound, but looking for a bearish trade going to the downside. And so at this point, even if I were, like I said earlier, do you believe in, buying on the way down? In other words, nibbling a little bit on the way down at cost averaging down, or on the flip side of that, do you wait? I'm just asking you, do you wait for a reversal and buy on strength? There are two thoughts about doing that. So while we're here on Tesla, let's talk about Tesla really quick, and also throw out the next two rules. Okay, we've covered what to trade, we've covered where to enter and where to enter. The third rule and third key is you have to define where you're going to exit, where you're going to exit the trade. And then that incorporates the only two things we control about a particular trade is we control where we're going to enter, and we control defining where we're going to exit. And number 4 is what strategy are you going to use? Now, some people will use a option strategy on the based on the technicals, and they will target shoot their options based on technicals, and that's a cool way to do it. I love trading options that way. But Tesla. So that's rule number, let's see, 1, 2, 1, 2, 3, 2. Oh, we finished that. Okay, so that was rule number 4. So right now we've got what to trade, where to enter, where to exit, what strategy we're going to use. And so we've got 2 more trading rules that we'll get to most skosh. And let's see. So, okay. And I talked, so Tesla, and I will take a look at a couple of trades. What else we got going on here? And, I want to take on this. Yeah, this shows it right here pretty well. Okay, Tesla actually has levels of support down at 152. 152 fails. There's not much to catch it between 152 and 118. And people don't believe when I say, yeah, Tesla get back to 120. They go, nah, no way. And so, not a problem, man. Lawson, thank you very much. I really appreciate that. And so those of you who won't be not seeing the comments, but he just said he looked forward to doing the rewind on it. Yeah, I will be posting over on the podcast, on podcast area of the YouTube channel, Market Tech Talk. And so if we fall from there, but then I like to take it, and then 101 is the ultimate low, but it's not the ultimate low. Roll it back one more time. And there's a level of let me see if I can go over and see it, find it right there. That shooting star was a swing high that gives me a level of support at $64.60. Now, do I think it's going to get to that low? I don't know. All I know is from a technical standpoint, if we keep breaking through support, we could buy a lot of shares of Tesla at $64 or $100. And so part of the thing is determine what you're going to do. Again, I don't like catching falling knives. And so I'm going to wait for a rebound. I will be patient with that because you have to be patient in either way. Because whether you choose to nibble a little bit on the way down, if you do that, if you're buying if you're trading the falling knife, where's your stop loss? Where's your stop loss? Is it at 10%, 20%, 5%? Because you have to control risk. And the thing that's one of the issues that I see people get hung up with is if you're basically buying a downtrend, how do you determine where you're going to exit? Hey, guys over there on Instagram, thanks a lot for being over there. Hey, Doc, how's it going? All right. So if you want to leave a comment, I'd appreciate that. And hey, Sonny, how you doing? Mike, it's been a long time, buddy. Lewis, how's everything over in Los Banos? Los Banos! You still selling real estate over in Los Banos, yeah? You guys are looking for a real estate guy in the San Joaquin Valley. Lewis is the guy to see. Give you guys a shout out there, okay? Okay, hey, let's jump into that takes care of Tesla. And so, yeah, this rollover on Tesla, not a healthy thing. Now, I'll take about 3 minutes to go through a couple of other stocks. I've got let's see, I got to start at the top of the list there, Jake. AMD. What's AMD doing? AMD. Here's not TAMD. There we go. Okay. Here's what's going on. And I know that right now, and I know that Ram, you and I have had this little discussion. When the market's in a condition like it is now, it can be very frustrating because it's gone on a very strong move to the upside, and gone on a strong move to the upside, and you feel like you may, oh gosh darn, I've been missing out and all that kind of stuff. But earlier this year, I mean, I'm on schedule for my 40%, on my time schedule for my 40%, profit for the year. And so, I'm on track. And so I really have to force myself and sometimes sit on my hands to not try to manufacture, because I don't want to wind up being planless Pete. or I don't want to be that guy that Wilder talked about, letting my emotions override my system, and I won't. I've done a pretty good job of that, and that's when I started becoming more profitable. So on AMD, we're getting a really nice shooting star here, Jake. We voided this shooting star here, but that's a spinning top doji. As you can see on the weekly chart, daily chart, excuse me, the momentum is kind of, up towards the overextended level. Take a look also at what's going on here with the RISI. I've added RSI as a secondary momentum indicator because I know a lot of people have been talking, wanting to know about RSI. I know a lot of people trade RSI. And Carrie, to answer your question, yeah, I've been studying the market for about 20 years. I took it to 30 plus years. I've been trading it. I've done all the course study to do my CMT. That's the Chartered Market Technicians. But when you get to a certain point in life, you have enough initials behind your name. So yeah, lots of books, lots of study, lots of testing my own system. And that's how I developed the AutoPilot Trading System. It's a swing trading system. So I went and looked at all the systems that were out there. I cherry picked what I thought was the best, that without putting in the complication, and that's how I developed it. If you're looking for a great book, mine is over on the YouTube. Is over on where is my book anyway? There it is. I'll show it to you before we leave. It's called Trade Your Way to Freedom, Retire Sooner with More Money and Less Fear. And you can get over on Amazon, or I'll put a link for it in the description. So that's what I'm looking with AMD, Jake. I like the breakouts, but now we need to get a pullback on the breakouts. Remember on breakouts, 65 to 75% of all breakouts will have a pullback towards the breakout. Let's see what else we got. I bet you, okay. What is I bet? We're getting a lot of these kind of moves, these hyperbolic moves to the upside. Let's take this is a newer entity also. And I didn't know what the volume is. Is this a ETF on this? Yeah, okay. Bitcoin, iShares, iBitcoins. So that has gone up really fast, and so it's prone for a pullback. How much of a pullback? I don't know. One could throw on a Fibonacci right here. Graham, throw on a Fibonacci from here to here, from this high here, back down to this low. And a normal retracement could take you back all the way to 32.87, all the way back to 28.77. Next, Jake, you had one, and I will get to NVIDIA, Moscosh, Shopify. Okay, Jake, Shopify. It hasn't changed since the last time I talked to you about that. Okay. No, basically, Jake, what we're getting right now, we're down into a lower level of support where it found support before. Is it going to go a little bit lower? Keep your eyeball on what's going on with the momentum, waiting for that shift. I do have what's this called, a bullish harami with a small body inside a big body from the previous candlestick. And so that is a bullish reversal signal, but it's a weak reversal signal. As I said earlier, I like it better down here about the 71, 72 level, but it's doggone close, man. It is really, really close. And then my projected, since we're now have dropped below all the moving averages except the 200 down here, is that it would rebound into the moving averages, and that would be kind of our first profit target. NVDA. Did I do that right? Yeah. Okay. NVIDIA. I don't know what to say about NVIDIA other than it just, party on, but and so NVIDIA, what it's doing, and here's one of the things where um, the Fibonacci's come in really handy because once you break out into blue sky territory where there's no levels of past resistance, then use the Fibonacci's to get an idea of where resistance may be. And right now that is showing up at about 919. And so we will look for a pullback towards this area, or it may jump up there and then perhaps sell off. To me, it appears as if NVIDIA is reaching, levels where the oxygen's getting kind of thin. And so it wouldn't surprise me to see it pull back. Where's a healthy place to want to buy it? I like it basically either off of the 8 or the 20, because those are the moving averages that it's respected on the way up. Hope that helps, Mohammed. Are you in it right now? Did I do that right? Is that Datadog? Datadog is the most favorite. And Josh, you're gonna have to watch the replay, bud, because I've done Tesla already. I'm sorry about that because I'm almost running out of time. I've got 3 minutes. So, hey, Datadog. Yeah, when I'm looking at Datadog, this is not looking all that healthy. And what I'm meaning by that is, one, the momentum is still shifting down. Now, we have also broken structure to the downside here. We've actually intraday taken out these swing lows. And so I have a series of lower swing high, lower swing low. So at least I've got a temporary move carry to the downside on Datadog. Is it going to keep falling? I don't know. I mean, on the weekly chart, looks pretty healthy. On the monthly chart, monthly chart, I could see on the monthly chart, and the reason I'm taking a look at that, 113 might be an interesting price level, which is back here. 113 is a zone that corresponds with where it broke out previously. So somewhere between, I'll give you a number, 113.32 all the way up to 117.72. So do me a favor. What one thing from today's session just really stuck out in your mind? Drop a note in the chat box. Also over on the Instagram, please drop a note over there. Thanks for joining it. And again, also, if you're leaving a comment over on the YouTube channel, let me know what the biggest pain point you have about trading. So just drop that in the box. I'd really appreciate in the chat box. And Josh, I've got a couple other videos over on my YouTube channel that talk specifically about where I think Tesla's going to go. And also this will be immediately accessible after we get done here. So with that, I just want to say thanks for joining. Aloha. God bless everybody, and have a great rest of your Wednesday. I just washed my tongue. I can't do anything with it. We'll see you later. Aloha.